Hey guys, welcome back to the After Hours. I'm the 8-Tailed Beast, and today we're going to talk about the latest trends in the market. In particular, we're talking about the surge of penny stocks through the SPAC mergers. It's been an exciting week with HPX, a global mineral exploration company, making headlines after its merger approval with Brazil's Emergência Participação. So, what is a SPAC merger? SPACs, S-P-A-C. SPACs, or Special Purpose Acquisition Companies, are shell companies that are created to raise money through IPO, then use that money to acquire an existing private company. SPACs are formed with the intention of taking a private company public through a merger or acquisition. The success of a SPAC investment depends on the target company's potential. Another factor is the SPAC warrants that allows investors to buy a set number of shares in a common stock at a fixed price within a certain time frame. They can give investors additional returns if the target company performs well. This week's trend in Pennyland involves SPACs merging with private companies to go public without an IPO. LUNR and OCEA saw success last week. This week saw runs in LION, CDIO, and HPX. On Wednesday, after its merger approval, HPX ran over $50, a staggering 370% increase. The crowd was already warmed up and ready to go the night before because ILON lit a fire that HPX had to put out or add more fuel. Now, LION is also a SPAC that's formed to raise funds. Lionheart III has recently approved a merger with Security Matters Limited. SML is now publicly traded on NASDAQ as SMX. The stock price of SMX also surged 370% on the news of the merger, reaching a high of $34 per share, except it took 2 days this time. Here are some bonus stocks. CDIO is a biotech. It rose 500% over a couple days on the news about its AI-driven genetic research. It has SPAC warrants with a target price above its initial price. This indirect correlation may have something to do with its break of its resistance. All these events highlight the growing enthusiasm for SPAC and IPOs. Don't get too excited. Penny stocks can be volatile and illiquid. HPX is a small cap with a micro float of 2 million. It trades with a sudden surge and slow fades. It's important to lead with risk management and take profits often. Other honorable mentions come from an active week in the industrial, technology, and the healthcare sector, which has created several opportunities this week for gap ups and bounce short opportunities. This week we had CFRX, ONCS, and RKDA. Here's how I would trade, or how I did trade these stocks. All right, so first, let's start off with the mistakes. All right, so this is ONCS. ONCS, it was a gap plus bounce. On the 29th of November, ONCS had a 24 million individual resistance. Here's the intraday chart of the individual resistance. When I looked at the chart, it was over 100% before you touch this resistance. I underestimated it a little bit and it fell a lot earlier than I expected. The way I would have traded this is the way I wanted to trade this. I wanted to go in around 350. Now, the resistance itself on the daily candle starts around 260. Now, when we look on the daily candle, we can see this ran up to $4 and it starts at 280. Now, on that day, it actually dropped at 260. And so I never had a chance to even borrow for the stock. I wanted something closer to 350 before I even think about going in on this. But to be fair, this was already overextended by 140% at that point. I was treating it like a bounce short. It wasn't a bounce short, it was a gap plus bounce, which you're supposed to go in expecting only like a 20% or very shallow push at the open. This was a missed trade, but it's okay because I traded that same day CDIO. This one had a resistance that went up to $4. Now, the resistance actually went up to about 360, but we expected a run up to $4 because it was moving in the pre-market like it had some strength, but we expected it to be a test, and it tested $4. It wasn't the heaviest resistance, but I sized into it very slowly. I had my average around 350 and I covered where I thought there would be a reversal, which was around 305. It was a good trade. So this is CIDO. I went in the pre-market. It was a very small amount and I scaled into the trade around the resistance. After it pulled back, made some solid support with a double, almost a triple bottom, I decided to get out and I was okay doing that, because it wasn't breaking down like I wanted to, which broke my thesis. So I took my profits and I ran. the next day, CIDO broke out. And that probably has something to do with the warrants. And also, it didn't reach the normal reward for the profit margin, which signaled a lot of people were trapped at that level, around 3.4, 3.5. And when it did a break, I expected a minimum, a double break from that point. So I shorted the next day. So honestly, this trade was kind of a FOMO trade. I saw people in the chat, they were making money 20%, 30%, a little bit here, a little bit there, and I decided not to trade. Now, when I saw CIDO, I expected there to be a pullback around double where the break was, and I aimed for that. So I went in around 620, and then I scaled in all the way up to 650. I went in a lot heavier than I should, especially because the after hours were coming in less than 15 minutes. I covered as soon as I got my borrows back and a little bit of money because there was a double bottom, and that was enough for me to feel enough fear to get out. So I was playing with fire when I went in on this short on SDIO. What I was aiming for was double from the break area, which you would assume is 3.5, where most of the consolidation was, or the high a day from yesterday, which was 4. Now, I went in around 6.3 and scaled up to 7, expecting 720 to be the top that I was going to go in for one entry. But I was impatient. I FOMO'd after watching other people make money. At the end of the day, it worked out for me, but I got lucky because 20 minutes later, this went to 8. What made me get out was the double bottom in the aftermarket. Put fear in my soul. Now, this is HPX. With HPX, this one, I would have took a loss on it. I bottled my parabolic short skills after GCT. And when GCT, LUNR, and OCEA all went parabolic, they had this halting up kind of action. I would have chased into one of those early halts, aiming for 11 o'clock to be the point where it tips and we're about to enter the morning day low. On this chart, that's around $30. I would have got squeezed between $34 to $28, all the way up to $40. So this would have been a loss for me. If you see here on GCT, it waited till the next day before it had a break. That's the best case scenario for me. Come back later, aim for the late day break. All right, guys, that's all I got for you today. If you like what you saw, hit the like and subscribe button, and I'll see you in the next video. Peace.